Good morning and a happy Monday. Well, prices across the agricultural space mixed here as we approach the morning pause. I think the initial strength overnight was largely tied to a gap lower in the U.S. dollar. U.S. dollar has now bounced back, taking back much of the overnight weakness. Weather-wise, a drier than normal pattern across southern Argentina continues to provide underlying support. Also, dry areas in south central Brazil are also expected to see some relief by the end of the week. Here in the U.S., a major winter storm has finally pushed off to the East Coast this morning, leaving a trail of heavy snow, ice, and rain in its path. Much below normal temperatures are expected to hold across the central U.S. through the end of the month, with some gradual easing once we flip over the calendar into February. Some wheat areas across the central Midwest and plain states likely have seen some damage from the frigid outbreak. Likely be weeks before we know the extent of any potential damage here. The biggest feature in Friday's CFTC data was heavy speculative buying in soybean oil while selling in the meal. Money managers, as of last Tuesday, the 20th, remained short corn, also short wheat and the soybean products, while the long position in beans is holding right around 10,000 contracts. Friday saw heavy speculative buying in corn. We had it at about 26,000 contracts. That dropped their short position now down to about 63,000 contracts. Crude oil right now is steady to just slightly lower. March corn that did reject trade above Friday's high in the overnight session before pulling back, currently down 2 cents at 428.5. Friday's export sales at 158 million bushels. They were a 5-year high and fueled the surge of speculative buying. Open interest on Friday jumped nearly 19,000 contracts. We also got a cattle on feed report on Friday at 97% of a year ago. That as of January 1st, it was in line with expectations, while placements at 95% were slightly above the 93% expected. AgriWell, they raised their Brazilian production forecast 0.6 million metric tons to 136.6, and that's well above the USDA forecast at 131. They also estimate the first crop harvest and second crop plantings both sit at 5%. In soybeans, March beans right now up 2 cents, 10.69.5, holding just below last week's highs. We did actually stretch into new highs in the overnight session. Next resistance is the 100-day moving average at 10.82.5. March meal slightly lower, near 279. Oil hovering just above that 54-cent level, while also holding within Friday's range. Spot crush margins on Friday jumped up to a 5-month high at $1.86 a bushel. AgriWell also raised their Brazilian soybean production forecast 0.6 million metric tons to 181, and that's above the USDA estimate of 178. Their harvest estimate is at 5%. Harvest in Mato Grosso, their largest producing state, that has advanced 7% to 14% complete. Wheat prices here are mixed, within a penny or two of unchanged. Chicago March finally broke out of its 5 to 5.25 range on Friday, holding at 5.30 right now, up a half a cent. Kansas City wheat, that is also slightly higher, now it's flipped slightly lower, holding near 5.40, and that is just below the January high at 5.44 3/4. Minneapolis wheat overnight, that was capped at its 100-day moving average at 5.78. Thanks for listening, everyone. I hope you have a great day.